Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at HIVE Digital.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And before we get into today's stock, here is a useful tool for investors who want a faster and cleaner research workflow. You can check out stockanalysis.com Pro through the link below in the description. Use discount code ITP for 10% off. Stockanalysis.com is lightweight, fast, and works on desktop, iOS, and Android. The free version is useful for checking stock prices, financials, charts, forecasts, and news. But if you want deeper research, stockanalysis.com Pro gives you no ads, saves screeners, watch lists, portfolios, long-term financial history, dividend history, analyst filters, ETF data, and exports to Excel, CSV, and Google Sheets. Pro comes down to about $5.93 per month when billed annually after the discount. For heavier users, the unlimited plan adds unlimited downloads and unlimited stocks per watch list, and comes down to about $14.93 per month when billed annually after the discount. Stockanalysis.com is a research tool, not financial advice. It does not tell you what to buy or sell, and it does not guarantee investment results. Always do your own research and make your own investment decisions. This is an affiliate link, so we may earn a commission if you use it at no extra cost to you.
So starting off today, we are unpacking a massive, just a really massive business model transformation.
Oh, absolutely. It's one of the most ambitious pivots happening right now. They're basically shifting from being a purely cyclical Bitcoin miner, right, into a high-margin AI infrastructure powerhouse.
And the scale of this is just wild. They just unveiled these plans for a 320 megawatt Canadian AI gigafactory.
Yeah.
Which, get this, is capable of supporting over 100,000 GPUs.
I mean, 100,000 GPUs is just a staggering amount of compute power.
It really is. So our mission for this discussion, for everyone listening, is to figure out if this pivot is like a masterstroke of timing to capture this whole sovereign AI boom, or if it's just an incredibly complex, capital-intensive risk.
Exactly. It's a high-wire act.
All right, let's move into the wealth-building context, because to really understand this, you have to look at the legacy business they're trying to evolve away from.
Right. And if you are looking at this for a long-term portfolio, you really have to understand the core problem with traditional crypto mining.
Which is that it's just so notoriously cyclical.
Exactly, yes. As a business model, you are entirely at the mercy of Bitcoin's hash price volatility. When crypto winters hit, your revenue basically dries up overnight.
But your fixed costs don't.
Right. Your power contracts, your facilities, maintenance, none of that gets cheaper. So by pivoting to high-performance computing, or HPC, and AI, they're essentially trying to build a predictable, high-growth, institutional-grade revenue stream.
It's like, think of a farmer realizing that the water they use to grow their crops is actually worth significantly more if they just sell it directly to a thirsty city.
Oh, I like that analogy. That's exactly it.
But here's where I want to push back a little, because this is something you have to consider. Changing business models is incredibly expensive.
Sure. Yeah.
Does HIVE actually have the structural advantages to pull this off against pure-play data centers, like the established giants?
Well, that's where the emerging sovereign AI trend comes in. You have entire countries scrambling to build domestic AI infrastructure right now.
Right. They want their data kept within their own borders.
Exactly. And HIV's massive Canadian footprint perfectly positions them to secure these multi-year government contracts. So they are transitioning from this retail crypto play into a foundational tech sector asset.
Now let's look at the fundamentals, because they do have a baseline here. Total revenues exceeded $96 million in the latest fiscal year.
Which is solid, but the critical metric for investors isn't really the past revenue from Bitcoin. It's the margin expansion.
Right, the AI compute margin.
Yeah. High-performance computing and AI revenue can yield up to 15 times the revenue per megawatt compared to traditional Bitcoin mining.
Wait, up to 15 times?
Up to 15 times, yes.
On the exact same power footprint. How does that math even work?
It comes down to the end client. Bitcoin mining is a race to the bottom for cheap electricity. But AI compute is a premium service. Enterprise clients will pay top dollar for guaranteed uptime and specialized NVIDIA chips. You are selling digital real estate in a market where demand is just wildly outpacing supply.
Okay, that makes sense. But realizing those margins requires a massive upfront investment.
Definitely.
You don't just snap your fingers and have 100,000 GPUs running. So let's look at the balance sheet. Do they have the health for this?
That's a crucial point. Unlike a lot of crypto peers who are burdened by, hyper-leveraged debt from the last bull run, HIVE has historically maintained a very manageable debt load.
So they aren't drowning in interest payments.
Right. They are using free cash flow and strategic equity raises to aggressively reinvest in that 320 megawatt gigafactory.
And they have what might be the ultimate competitive moat here, which is ESG compliant, low-cost green energy.
Yes, and I cannot stress enough how important that is for you as an investor to grasp. Traditional data center competitors are stuck on multi-year wait lists just for power grid interconnections.
Because the grid is maxed out?
Exactly. The utility companies literally can't build the infrastructure fast enough. But HIVE already owns ready-to-use hydroelectric and geothermal facilities across Canada, Sweden, and Iceland.
So while competitors are waiting for permits, they can just plug things in.
Right. They can deploy next-generation NVIDIA GPUs in weeks, not years.
That brings us to the catalyst timeline. What should investors be watching?
The immediate focus over the next few months is the late June or early July earnings. The market is absolutely desperate to see the initial revenue contributions from the GPUs they've already deployed.
People want to see the actual cash flow.
Exactly. Any upward revisions in their HPC revenue guidance will be huge.
And obviously, any gigafactory updates, any announcements about phase 1 energization or specific GPU procurement deals with NVIDIA, those will serve as massive upside triggers.
Because it proves they actually have the chips, and then you have the macro tailwinds. The broader political landscape is shifting.
Right. We've seen the Trump administration promising a more future-proof market structure for digital assets.
Which means for you as an investor, the regulatory discount rate applied to their legacy mining operations could drop. It makes their baseline business more valuable while the AI side scales up.
Now let's pivot to the chart, because the price action here has been fascinating. On May 18th, the stock experienced a really strong momentum-driven gap up.
Yeah, it landed on all these lists of top-gaining tech stocks.
But then, on May 19th, they announced this massive 100,000 GPU gigafactory, arguably the biggest news in their history, and the stock traded perfectly flat.
Completely flat.
Why would a stock stall in the biggest news of its life? I mean, is the market just rejecting the news?
It's actually not bearishness at all. It's a textbook breakout digestion phase.
Digestion. Meaning what, exactly?
The market is absorbing the massive volume of the gap up from the day before. The stock is coiling. Institutional money needs time to model out a capital expenditure of this size. They don't just blindly hit buy.
Right. They have to run the math on that 15x multiplier and the execution risks. And that actually points to a structural shift in the momentum flow.
Yes, exactly.
The underlying shareholder base is transitioning. Retail crypto traders are naturally cycling out.
And thematic institutional tech investors are stepping in. These are funds that previously couldn't buy a pure-play crypto miner, but now they are establishing a structural bid under the stock because of the AI pivot.
So what does a market sentiment look like with that shift?
Well, we are seeing major institutional validation. Cantor Fitzgerald just maintained an overweight rating on HIVE and aggressively raised their price target from $3 to $4.60.
Wow, so that's a roughly 53% target increase.
Huge increase.
Ew.
The narrative is successfully shifting from Bitcoin miner to AI infrastructure. And recent 13F filings show growing institutional accumulation in this whole subsector.
And there's also a lot of speculative chatter out there, right?
Oh, definitely. Given NVIDIA's CEO talking up sovereign AI, there is very credible institutional chatter that HIE's Canadian Gigafactory could secure a government-backed compute contract.
Especially since they use regulated green energy. Governments love that.
Yeah, exactly. It checks all the boxes.
Now let's talk about the risks, because we have to be practical here. Going from a blueprint to a fully operational 100,000 GPU cluster is just an absolute logistical nightmare.
It's completely different from building a crypto mine.
Right. You are trying to procure that many NVIDIA GPUs in a severely constrained supply chain. Plus, you have to manage incredibly complex liquid cooling and build HPC networking. It is incredibly capital intensive.
It is. Execution risk is definitely the main concern here.
And then on top of that, you have the recent Bitcoin halving, which inherently compresses the margins on their legacy business.
Because they're getting half the reward for the same work.
Exactly. So that could heavily strain their free cash flow right in this very vulnerable interim period before the AI Gigafactory actually starts printing money.
But to counter that, you have to remember that flat price action on May 19th. It suggests the market has already heavily discounted this execution risk.
Like it's already priced in.
Yes. Furthermore, HIVE's hydroelectric power gives them a very low-cost advantage. It protects their mining margins far better than competitors who rely on fossil fuels.
So they can survive the stress test of the halving much longer.
Exactly. They have the runway to actually execute the pivot.
So with everything on the table, what's the final verdict?
Taking it all into account, HIVE earns an impressive bullish score of 8 out of 10.
An 8 out of 10.
Yes. The shift to a high-margin HPC platform backed by that massive Canadian green energy moat and favorable regulatory tailwinds, it just offers asymmetric upside right now.
And for anyone considering this, you have to understand the target horizon here is a 12 to 18-month hold.
Right. This isn't a quick flip.
No. You need to allow enough time to capture the multi-quarter revenue inflection as the gigafactory actually deploys and those high-paying HPC clients are onboarded.
Exactly.
But, it leaves you wondering something bigger. As nations scramble to secure their own domestic AI computing power, how long until these massive, independent, energy-rich gigafactories stop being viewed merely as high-tech corporate partners and start being viewed as critical, heavily protected national security assets?
Oh, wow. That is a fascinating angle.
Right. It changes the valuation game entirely if governments start treating them like strategic national defense infrastructure. Definitely something to keep an eye on.
Absolutely.
If you want to build a cleaner stock research workflow, you can check out stockanalysis.com Pro through the link below in the description. Use code ITP for 10% off. Pro comes down to about $5.93 per month when billed annually after the discount, and Unlimited comes down to about $14.93 per month when billed annually after the discount. Remember, stockanalysis.com is a research tool, not financial advice. It does not guarantee investment results, and you should always do your own research before making any investment decision. This is an affiliate link, and we may earn a commission at no extra cost to you.
And if this episode helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode.